Smoothed moving average. The smoothed moving average (SMA) is designed to smooth out price data over a longer period, making it less sensitive to short-term volatility compared to other moving averages like the simple moving average (SMA) and the exponential moving average (EMA). The SMA takes into account all available data points, which means that older data points are never completely removed from the calculation, but have a diminishing impact over time. The smoothed moving average (SMA) is a technical analysis tool used by traders to identify trends and gauge price momentum in financial markets. It is a variation of the exponential moving average (EMA), but with a longer period applied, which gives equal weighting to both recent and historical prices. This results in a smoother line that reduces the impact of short-term fluctuations and provides a clearer view of the underlying trend.